What's going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex. We're going to be going over Sprt support.com stock, which is the target of a short squeeze stock. Very volatile. If we take a look at barchart.com's highest implied volatility stocks, Sprt is definitely up there with a pretty high implied volatility of over 300% on most of the contracts. So what this means is people are anticipating a very big move with this stock, and it has been pretty volatile lately in the market. We saw a really nice short squeeze late August when it went from just under $10 all the way to highs of over $50. So really nice return for a lot of people, but it's still trending right now. It had a pretty significant pullback from its all-time highs, down over 50% from its all-time highs, but we're seeing this stock gain a lot of traction recently. The past week it's been pretty bumpy, dropped to lows of just under $18 before rebounding all the way to highs, weekly highs of $27 per share. So it's definitely a pretty big mover, even though it's only negative 1.63% on the past week. It's definitely having a lot of ups and downs right now, and there was a pretty significant sell-off on this stock last Friday, down negative 19%. So it's a really nice dip buying opportunity if you do like this stock, but of course it's going to be very risky, as with all these short squeeze stocks, and implied volatility is very high, so it's going to make a pretty big move. We just don't know which direction, but what we do know is we can capitalize on these higher premiums by selling options, and this stock being a relatively cheaper price stock, we can sell some cash here puts, which is going to be a pretty nice way to collect some weekly income. So let's head over to the options chain, and since it's a pretty risky stock, we want to sell the closest expiration date, which is just going to be weekly options, and you can continue doing this week over week on high implied volatility stocks just to collect some nice weekly premiums. So as you can see here, we're on the options chain. We want to make sure we're doing a sell put. This is a cash secured put. We're not buying puts. This is selling them, which is a neutral bullish position. And you can even make money when the stock goes down, just as long as it doesn't reach your strike price. So if we take a look at the technical analysis here, we do have some really nice support around this 17.5 dollar price range. So we're going to be selling options, selling cash secured puts just under that. Because there is some nice support here, showing that there's a lot of buying pressure going into the stock when it reaches this sort of level. So we're going to be heading over to the options chain. We can see the premiums are very high, because remember, as we said earlier, implied volatility is very high. It's over 300%. And if we take a look at the implied volatility here, these contracts are actually over 500%. Very high implied volatility right now, so we can go pretty far down on the strike prices in order to make some nice premiums. So as you saw earlier, we want to choose something that's definitely below $17 per share. I know a lot of people are still comfortable holding this stock at $20 per share, but for my risk tolerance for the stock, it's going to be pretty risky. So I just want to be a bit safer. I want to go down the strikes, and I want something with at least an 80% chance of profit. So something like an $11 strike looks pretty appetizing. 82 chance of profit, collecting $55 of premium per contract that we sell. Remember, as long as Sprt stays above your strike price, you're going to make your credit as in full. And we can continue doing this week over week for as long as implied volatility is staying high, and collect some nice weekly consistent income. And that's our whole goal with this strategy right here. So selling an $11 cash care put is going to be a very nice strategy. We do have to put down collateral of $1,100. So it's not that much. It's only $1,000. A lot of people, even with small accounts, can sell at least one cash secured put. But of course, if you have a larger account, you can sell multiple contracts and collect even more premium. Let's take a look at what a rate of return would potentially be with this contract. We're putting down a collateral of just under $1,100, because it's going to be our credit we're receiving subtracted from our collateral. So it's going to be $55 of premium we're collecting divided by our collateral, which is going to be $1,045. It's going to be our collateral minus our credit we're receiving. And that's going to be a 5.26% return in just 1 week. So very high return actually in just 1 week. So it is still pretty risky. The stock has to drop 50% or lower in order for you to lose money on this trade, but it's a pretty safe trade. I'm looking to sell some cash puts on the stock. Very, very high implied volatility, meaning that the premiums on these contracts are going to be inflated as well, and we can capitalize on the higher than normal premiums by selling contracts to the options buyers, because everyone's flooding into the options chain, buying calls, buying puts, because they do think that this stock is going to make a significant move, which it very well might be. But as a safer position, selling some options would be the safer strategy to play this stock. Definitely do not recommend buying calls, buying puts, because as we saw earlier, implied volatility very, very sky high, meaning premiums are very expensive. And this is actually the perfect opportunity for option sellers to sell some contracts on the stock. So if you want to be it safer, you could do something like a $10, even $9 strike. Even $8 is going to give you a nice return, and that's a 90%, over 90% chance of profit. Really, really high premiums. Good way to create some weekly income. Even an $8 strike collecting $18 of premium is pretty nice. If we do calculations here, it's going to be $18 of premium we're collecting divided by collateral, which would be $782 of collateral here, because it's going to be our credit minus our collateral of 800, which is going to be a 2.3% return in a week. If you can do that every single week, 2.3% return, you're well over doubling your money within a year. So that's pretty nice strategy, and kind of gives you into perspective how powerful compounding interest is going to be and working in your favor. You could even do lower strikes. 7.5 strike will give you $10 of credit here. So $10 divided by a collateral of 740. 1.35% return, and that's still going to be incredibly good, incredibly good for this week. So if you take a look at the charts here, it was previously trading around the 6.5 and $11 range. So we can sell some cash secured puts. Anything below those strikes would be pretty good. Anything below the $11 strike would be pretty nice. And as we saw earlier, 7.5 strike, you're making over 1% return in a week. That's high return. Might not seem much, but it adds up definitely over time. And it's a way to consistently get rich. And of course, $10 of credit in 1 week, it's not that much, but you can always sell multiple contracts. Say you have a larger account, you sell 10 of these contracts. You're going to be making $100 every single week. Very nice strategy and very safe strategy. 94% chance of profit right here. Our break even is pretty low on these trades, and it's a very nice strategy that we will be personally looking forward to opening next week. So that's about it for this video. If it helped you in any way, please leave a like, comment down below your thoughts are on Sprt, and of course subscribe for the channel. It helps out a lot. Thanks for watching.